Your Money, brought to you by the Welch Group.
As we approach 2025, crazy, right? Some key tax changes tied to inflation could impact your finances. WAFF 48's Haley Baker spoke to a senior financial advisor from the Welch Group to break down what these adjustments mean for you and your money.
Yeah, 2025, there are several tax provisions being adjusted to keep up with inflation next year. So this will be impacting deductions, retirement plans, and a whole lot more. So to explain, we have Jay McGowan back from the Welch Group to break down these critical changes and what it means for our viewers at home. So what does this mean?
So the first thing I always like to point out is the standard deduction. So there's two types of deductions that you can take against your adjusted gross income.
Okay.
The first is an itemized deduction. So that is if you have like charitable gifts and mortgage interest to write off and all these things, you add them together. And if that amount is more than the standard deduction, then you can write that off.
Okay.
For most Americans under the current tax law, they take the standard deduction, which is just a set amount that you can reduce your taxable income with. And so that's going up in 2025 for single filers, it's going up to $15,000.
Okay.
And for married filing joint taxpayers, it's going up to $30,000. So this is about, I believe, a 3% increase above 2024. So that's a good thing.
Yeah.
So it's just more money that you can deduct against your taxable income.
And what about changes being made to like 401k plans, anything else, IRA contributions, things like that?
In 2025, the 401k limits, or the amount that any employee can defer of their own dollars into a 401k, is going up to $23,500, which is an increase of about is an increase of $500 over last year.
Okay.
And then so this is a pretty interesting one, the catch-up contributions. So you can do $23,500 into a 401k. Anybody can do that. If you are over 50, you are able to put more in to your 401k. It's helping people catch up if they're behind on retirement. Yeah, it's a good thing.
What updates are coming as far as the HSA, the health saving contributions?
Yeah, so those are increasing as well. The limit for an individual person is $4,300 per year, and for married filing joint taxpayers, the aggregate is about $8,500 that you can defer of your own money on a pre-tax basis into a health savings account. So if you're an American saving for retirement between the age of 60 and 63, you can do like almost $35,000 of your money deferred into a 401k, which can really help you save taxes now.
Right.
Depending on whether you have a Roth option in your 401k, there can be some benefits either way. But that's a pretty good change that'll help people save more for retirement.
And Jay McGowan, great advice as always. Thank you so much.
Thank you.
And for more ways to protect your money, be sure to tune in each Tuesday here on 48 News at 4.